Good afternoon. This is Brian Shannon from AlphaTrends.net. Today is Monday, the 11th of April, 2011. Let's take a look at this market. We're closed here. The S&P 500 lost 40 cents today, the SPY that is, and it closed below the 10-day moving average. Not really a big deal, but I'm only pointing it out because that has kind of defined this most recent move higher. When we look at the 30-minute time frame, I've been pointing out that, well, first we broke this trend line, and then we've been kind of turning sideways with a 5-day moving average back and forth, above and below, as we were in this 133 to 134 range. Well, today, obviously, what happened here was basically what we were looking for, which I had spoken about last Friday in the Stock Twitch show, and that was a little bit of strength up towards that 5-day moving average, and then a failure. So it did present a good opportunity to sell short. Kind of had a little bit of a false start in there initially, but the sellers did remain in control for the session. And right now, what I think is important to look at are what are the potential levels this market can drop down to. I don't think we're about to enter a big bearish phase. In fact, it's pretty difficult to say where we're going to be going based on the fundamentals, knowing that earnings are really starting today with Alcoa, of course, and we're going to have it being a lot more dependent on the individual earnings for on a stock by stock basis. But looking at the volume weighted average price since this most recent move, that would put us down near about 131. That 131 area is well, we've got this 20-day moving average down at about 131.15 as well. So that if we see some further weakness, that might make sense. Also, if we take a look at the 38.2% retracement of this move, you can see that would bring us down to 130.66. These real tick charts, you can see it's real easy to get those, and I'm sure it is in a lot of others as well. But the volume weighted average price calculation is a pretty cool tool that I like to look at here. The NASDAQ, when we look at the volume weighted average price since the event, that is since the March lows, you can see it's right at about $56.30. And I was thinking that might be an area we would actually visit today, because what we've seen in here has been obviously the same thing. We had that 5-day moving average holding a support. We were back and forth above and below it, but we started getting that negative slope to it, and then today we had a rally right up to that declining 5-day moving average, and then a little bit further weakness. Well, this level right in here, that 56.30, is approximately equal to the 38.2% retracement of this move as well. So you can see how it kind of laid right on top of there. And when you have a couple of things that come together in one area, it makes it a little bit more important, because more people are likely to view that as an important area, whether they come to the conclusion that 56.30 is important because of a 38.2% retracement, or because it's the volume weighted average price since this move began here. So the more eyeballs on it, obviously more people are going to be paying attention. But the NASDAQ and the S&P, we remained below the declining VWAP throughout the session, so buyers really never gained control, and you can see that advanced decline line was pretty much worsening throughout the day, closed pretty close to the worst levels of the day, with about 2 decliners for every 1 advancer. And so the NASDAQ looking like we're going to see a little bit further weakness here possibly, and what would change that would be getting back above probably 57 and a quarter and holding above it. As I said midday, I think that we're going to have to get above and hold above these 5-day moving averages for at least a half hour or so. The Russell 2000 has seen a little bit more aggressive profit taking, and that's maybe to be expected because of the magnitude of this move. The volume weighted average price since this rally began is down here at 82, but the bigger level really on the daily time frame is this 83 area, and we came down. Today's low was what was today's low? 82.90. So we slightly undercut these prior highs and what's been an important level. So that doesn't mean that you want to be a buyer in there. If we take a look at the Fibonacci in here, we've come close to a 38.2% retracement, but maybe we bleed it off a little bit down towards the 82 level before this market is able to bounce. But right now, when we take a look at this 10-minute time frame, we've got a very clear pattern of lower highs and lower lows below a declining 5-day moving average. Now, the bigger trend here is obviously bullish, and we're up at multiple year highs in the Russell 2000, so you can't be calling this any kind of top other than an intermediate term top. But if you've been trading it to the short side, you want to start maybe locking in a little bit of those profits. And if the market, we're going to need to see a new pattern emerge of higher highs and higher lows. So I don't think that's likely to occur tomorrow, but anyways, it still pays to be a little bit defensive in there, I think. The semiconductors were still having difficulty with this 35 level. As we know, on Friday, the market broke out beyond that 35 level and then failed. We've now come down today to the level where it was basically supposed to, near this 34.40, and this prior little level of resistance, which is now acting as support at 34.40. Realistically, these semiconductors do look a little bit more neutral than the rest of the market. So a lot of indecision right now, and that we can see here on the charts, as well as with earnings due, that there's going to be more indecision. And when it's earnings season every quarter, you just have to be extra aware of when the company that the companies that you're trading are due to report. If you don't know, I think you want to err to the side of caution and probably just not trade those. By the way, subscribers, will talk about the stocks that we were involved in the webinar this evening. Thanks.